What's up, everyone? It is the Profit Report with AB and Steve. My boy AB is out, so I'm holding it down solo. Happy Tuesday. What's going on with you guys? Man, I was this close to not do the stream today, but we've been going, I think, 42 days, 43 days in a row now. I don't want to break the streak. So your boy had to jump in, make sure the people get what they want. I know San requested this episode, Wingstop. So that's what I'm here to do. We're gonna review Wingstop, gonna see what's going on with them, and yeah, we're here, man. You already know. It's the profit report. Let's jump into it, man. Wingstop. Man, I don't remember the last time I went to Wingstop. Let's see what kind of food they got nowadays. I mean, I know it's wings, but a lot of people like what they have to offer. It's a simple menu. I think it's wings, fries, and I don't know what other sides do they have. Let's see. Let's go to their website. Boneless meal deal, 10-piece classic combo. Find your flavor. And I think people like their sauce as well. I think their sauce is what a lot of people like. So they have wing combos, chicken sandwich. They also have tenders, sides, dips and flavors, and then desserts. Not a large menu, but kind of the essentials. And there's a reason that I'm mentioning this because that's one thing that they're known for as far as expense. They're very lean operated business. And one of the reasons for that is they don't have a huge menu. And that's a big benefit. When you don't have a lot of menu, you don't have a lot of staff, you could operate with a low cost. So let's see if they've been on the loose news lately. Wingstop. Before we get into the financials, happy Tuesday, everybody. Wingstop. Where's the news button? What the hell? Wingstop. Fan favorite ranch is incredibly easy. So the ranch is very popular. So Wingstop. Maybe I have to do no space. So some recent news says Wingstop Inc. Wing shares sold by Invesco Limited. So it looks like this company oh, come on, dude. This is like a freaking scam. Get out of here. Oh no. Block. Let me get out. Spammy. So let's see if they've been in the news lately. And one of the reasons I want to look at the news is, what happened yesterday with Cracker Barrel, with the branding change and all that logo change. There was a big uproar about their logo change. So I want to just check to see if Wingstop, if there's anything that is that has changed. Oh, so Big X the Plug throws album release party at a Dallas Wingstop. I know down south that is very popular. Wingstop secret sauce. It's 60 million strong army of chicken tender loyalists. What? It says Wingstop secret sauce. It's 60 million strong army of chicken tender loyalists. CEO Michael Skipworth tells Fast Company how the company homemade tech stack, including an AI-powered kitchen, has it winning the Tendy Wars. So the tenders must be smacking. Okay. Wingstop calls itself the wing experts, but Michael Skipworth, CEO of the 2,800 location fast casual chicken chain, likes to highlight a different distinction he's proud of, having nothing to do with food. People don't think about Chicken Wing Restaurant being a digital powerhouse. Today, after spending years taking cues from outside the restaurant industry, airlines, beauty brands, he has built exactly that, a thriving e commerce business that just happens to sell America's favorite protein. So Americans love wings. I mean, I love wings. I just had wings today. In the second quarter of 2025, diners spent more than 1 billion at the 31-year-old chain ordering wings, boneless and bone-in, and chicken tenders in custom combination of 12 flavors ranging from original hot to spicy Korean Q, mango habanero. Okay. So Popeyes, for a comparison, reported 1.5 billion in sales in Q2. All right, so there is a lot of buzz around Wingstop right now, and you could tell that also with the stock. We're gonna look at it. Let's just look at a few other articles. It says Wingstop reveals next drop: BOGO chicken tenders, buy one get one tenders. What do you guys think? Are the tenders from Wingstop really good? I like Cane's. Cane's is pretty good. I like their tenders. I haven't had Wingstop's tenders. What else? First location in Glasgow. It says Wingstop Inc. Wing share sold by State of New Jersey Common Pension Fund. Oh, so not this freaking website again. All right, let's look at their stock. Let's see. Wingstop stock. It's a little pricey, $325.34. 52-week high is $433. Let's see, 1 year. So within 1 year, it actually has moved around a lot. At one point, last year around this time, it was about 388. Actually, it was trading higher than what it's trading right now. Took a little dip in October 31st, 2024. And then it even declined even further early this year, around March. I lost. That's a big drop. Sheesh. I mean, these are big drops. Like, what's going on? Why is that happening? And then, and it's usually around the quarter ends, but there is huge spikes, and then it jumped up again on June 11th to 381, dipped back again on July 25th, and now it's kind of rebounding a little bit. But yeah, there has been a wild ride. And one thing that stands out to me is you look at the PE ratio at 54. 54. So whenever you see that PE ratio, the higher the number is, that means it's expensive. That's the price to earning. So that's very expensive. It's trading at a high multiple. So people are optimistic about where this company is going. But as a person buying the stock, it's like it's a little pricey. If we compare that like to, I mean, let's say for example, Shake Shack. Let's see if we could look at their PE ratio. Why are you not showing it to me? All right, let's use AI. This is where you use AI. Okay. Compare Wingstop's PE ratio to its competitors. So Wingstop's current PE ratio is higher than the average for the broader retail wholesale sector and the hospitality industry, indicating a higher valuation. However, when compared to direct peers like Yum China, what's Yum China? I never heard of Yum China. Wingstop's PE ratio is also higher, suggesting less affordability. So that's the same thing that I was saying. Relative to its current earning, investors are willing to pay a premium for Wingstop due to its strong historical growth and optimistic market expectation for its future performance. So whenever you see a stock that's trading at a higher PE, just like what Wingstop is doing, there is an optimism about where the company is going. And oh, I'm just looking at the comments. Sheesh, I wasn't even seeing it. What's up, AJ? How you doing, man? Sorry, I'm just seeing the freaking comments. It was disabled for a moment. He said those chicken strips are stupid. Why? Why are they stupid? They don't. You don't like them? Wingstop is the best. New Jersey is the best state too. Oh man, in New Jersey, you can't even pump your own gas. By the way, you have to. There's somebody that pumps gas for you. You can't even pump your own gas. Well, New Jersey is a little weird state. Wingstop is way better than Buffalo Wild Wings too. I'm a Buffalo Wild Wings guy, man. AJ is a fan of the stock though. He said he would buy it. It is a little pricey though. Does that scare you at all? Because the price is $325. I mean, how much do their wings cost? That's like how many wings can you buy with $325? You could buy a lot of wings. Like, what's their menu? Hold on, how much is the average? What's the average? What is the average? What's the price for a wings meal at Wingstop? So a 10-piece wing combo can cost around 17.29, which includes 10 wings, regular fries, or veggie sticks. And so let's just for easy math, let's say 18 bucks. So with 18 bucks, you could buy you so with 325 divided by 18, what does that give us? Where's our calculator? See, back in the days, I could do this in my head. Nowadays, I'm not. You could buy 18 of those and feed the homeless. No, but it is a little pricey. But let's see if it could be you know if it does if there is a case for optimism with Wingstop. Why are people optimistic? Why are investors willing to pay a big premium from Wingstop? I mean, let's look at their annual report. I mean, let's dive right into it. Let's get into it. But one thing I forgot before we get into it, where, when, and where and how did Wingstop get created? So Wingstop began in 1994 as a small chicken wing restaurant in Garland, Texas. Shout out to Texas. And has since grown into an international public company. So Garland is close to like Dallas, right? The company's strategy has focused on franchising, digital innovation, and menu expansion to drive its rapid growth. As of mid 2025, Wingstop has over 2,800 restaurants globally. Wow. Most of which are franchised owned. So it's a franchise business, similar to McDonald's, similar to Jack in the Box. It is a franchise led business. I think about like 98% of their business is franchised. And we're going to also look at how much it will cost you to have a franchise. Because, Rick Ross, for example, has like over 30 Wingstops. So 1994, Antonio Swad and Bernadette Fish, I don't even know how to say that last name, Fiaschetti founded the first Wingstop restaurant in Garland, Texas. What do they look like? Let's see. Antonio Swad. Are they Italian? Antonio. Let's see, Antonio. So this is the one of the founder. What, this thing cost $375 just to get this picture? Okay. So this is the founder. And where was I at? And then the other one is Bernadette Fiaschetti. For some reason, I just like to look at who the founders are. I don't know. It's just something I like to do. Bernadette Fiaschetti. Shetty Wingstop. Founder. Is this her? Let's see. So it's a man and woman that are the founders. You know, when I first looked it up, though, I only heard about the guy. I'm just finding out that there is also a female founder. Okay, so these two, when they first found it, okay. And so 1994, that's when they started the business. 1997, the company began offering franchises, making the start of its expansion strategy. Key milestones in 2003, the investment firm Gemini Investors acquired Wingstop, providing capital management expertise for growth. Um, Rebecca said, should be. You're talking about as far as a man and a woman should start the business? Is that what you mean by should be? Gemini Investors. Who are they? Gemini Investors. Oh, private equity. Private equity. That's how the world is run, guys. If you don't know what private equity is, you know, it's not a publicly traded company. These are a group of people that take very wealthy individuals' money and then, or it could be one specific individual that's very rich, and then they use that money and invest it into private companies, or it could be a publicly traded company. They buy it out and then make it private. They make it efficient, they make it profitable, and then usually they make it public after, and then they sell that stock, and then they end up profiting. Sometimes they keep them as private companies as well, but just look at this private company, private equity company, look how many companies that it has in many industries. I mean, I'm not familiar with most of these, but just look at how many companies. And if you see like a private company that's really successful, most likely it is owned by private equity. But this is the company that initially invested in Wingstop. Um, and then eventually took it public. So this is called Gemini Investors. And so in 2003, that's what happened, providing capital management expertise for growth. In 2010, Roark Capital Group acquired the chain, further fueling expansion. Um, and then in 2015, they went public, meaning their stock was offered to the public. Anybody could buy it under the NASDAQ. What's up, San? How you doing? We're covering your pig today under the ticker symbol WING with initial public. So when it first traded, it was $19 per share. So if you bought it in 2015, 10 years ago, and you just bought 19 bucks, right now the stock is what's over 350, around that. I mean, you would have pocketed about 320 just from one stock. So if you owned about 10 of those, you could have made about 3 racks. If you owned 100 shares, you know, you could have made about 32,000. So it is worth noting when, you know, new stocks debut. It's worth noting because, I mean, look at Wingstop, from $19 per share to close to $400 right now. In 2021, the company launched Thigh Stop, a temporary digital-only concept to address rising wing costs. And 2022, Michael Skipworth, who was the current CEO, was appointed president and CEO after holding various leadership roles since 2014. The company also introduced a chicken sandwich to compete with other fast food offering. I mean, you almost have to have a chicken sandwich nowadays. This must have been around the craze for the chicken sandwich for Popeyes. You guys remember that when the chicken sandwich came out for Popeyes, everybody was hot on that. Like you couldn't even find it anywhere. Like I had the last one at when I went to Phoenix. It was crazy. 2024, Wingstop continued its global expansion, increasing its long-term growth target. Oh, and then 2025, it was named the official chicken partner of the NBA. Oh, well, that's cool. Current status, it says rapid unit growth. Wingstop continues to. What's up, Bree? How you doing? Oh, she said. Sam says, how many wings would have we gotten? Oh, AJ, you didn't see it. I don't know if this is a delayed thing, but their stock currently trades at. Well, let me get the actual Wingstop stock. I was saying it's a little expensive. It's about $325. It will cost you to buy one stock of Wingstop, and but you could get a meal from them about for about $18. So I was saying, man, AJ, you say battery's about to die again. We gotta buy you a charger, man. So yeah, it's a little pricey, but there is a lot of optimism. So we're gonna see in the annual report why are people optimistic. They have also grown a lot as of June 2025. They 129 net new restaurants had opened in the second quarter alone, meaning between April to June, they added 129 restaurants, demonstrating a 19.8 unit growth rate. And when you have new restaurants being added, it must mean that there's demand. So that's a good sign for Wingstop. AJ says if you bought at 19 and went to 325, that's a lot of invested wing. The wing dividends must be crazy. Their dividends is all right. It's not super crazy. It's actually pretty low. It's 0.37. But they have been consistent in giving dividends, so that's one thing you have going for them. But it's not huge. It's not a big dividend. 0.37. It's not a lot. And digital innovation, the company has invested heavily in digital platforms. So just digital sales accounted for 72% of total sales. And Wingstop's My Wingstop tech stack has expanded the digital database to nearly 60 million users. Dang, 60 million users? Wow. You guys like Wingstop? Like top wing spot for you guys? Top three. What is it for you guys? Let me know. Is Wingstop better than Buffalo Wild Wings? Global expansion. Wingstop is actively expanding into international markets. Yeah, that's another big focus for them. They are expanding. They even went into South Korea, but right here it says with the first restaurant opening in Australia and the Netherlands in 2025. Revenue has grown in 2025, 12% year over year in Q2, 274 million. And this is 2025 that we're looking at. Same store sales. Oh, that's not good actually. Though, so despite overall growth, domestic same store sales declined, reflecting some pressure on consumer spending. So that's another metric that you measure when you review restaurants. You see if year over year, if that same restaurant, if they ended up selling more or less than the previous year. But it is one of those things where if the economy is bad, which in this case people are not spending that much, it is hard for to have sales growth year over year in the same store. Also, Bree says I'm a fan of Wingstop garlic parmesan. Okay, okay. I know their ranch and stuff is very popular. I had read about it, so much so that people are saying that they could buy it at a store, even if they had it at like a grocery store. So, Bree, would you say Wingstop over Buffalo Wild Wings? What other wing spots are there? Because for us out here in the Northeast, I mean, we have Wingstop. I don't even know actually if we have Wingstop. Um, Maybe we do. Is there Wingstop? Let me see. I don't know if there's Wingstop in Rhode Island. Is there Rhode Island? Oh, so plans to open its first location in Johnston off of. So we don't have one yet, but it's coming soon. Okay, so global unit count 2,800 restaurants, menu innovation. The company continues to roll out limited time offer flavors, including the Mexican street spice flavor, the buy one get one promotions for its chicken tenders. But economic headwinds. Management has noticed some softness in the domestic same store sales, particularly in areas in lower income or Hispanic demographics due to consumer spending concerns. I mean, this is another big problem is even if people do want to eat out, a lot of people are not spending as much. So that does affect your business. Even if you're a great business, if people can't spend, that's going to affect your business. So let's look at the annual statement, man. Let's see what they got going on. Let's see what's going on in here. Okay, right off the bat, I mean, nice and colorful and 76 pages. Okay, okay. This is one of the only annual reports that I've seen where it's less than 100 pages, like, and colorful for an American company. Usually see like annual reports are super boring. They don't have good fonts, they don't have pictures. European companies do, but American companies, so they already started off right, in my perspective right now, looks wise. So it is incorporated in Delaware, but their main office is in Dallas, Texas. They trade under the symbol WING under NASDAQ. So if you want to look at the stock, just type in WING. You could buy it at any brokerage. You could buy it on your Robinhood. You could buy it on E-Trade, Charles Schwab, Fidelity, etc. So it says that they are the largest fast casual chicken wings focused restaurant chain in the world, with more than 2,500 locations worldwide. And they began franchising in 1997. So less than 20 years ago, they started franchising. And then within that time, they have grown to 2,500. So they have grown like over 100 restaurants per year in that time span. So they're growing fast. And the common stock trades under wing. We are dedicated to serving the world. Let me make it a little bit bigger. The world of flavor through unparalleled guest experience and offering classic wings, boneless wings, and 12 bold distinctive flavors. So they have 12 flavors. So the company is primarily a franchisor with approximately 98% of Wingstop restaurants currently owned. So most of the Wingstop restaurants, about 98% of them are franchised. So if you meet the qualification where we're going to look at as well, you could own one. So it's not like Starbucks or Chipotle. They operate under a different model. It's 100% company owned. This company is similar to McDonald's in that it's mainly operated by franchisees. We operate in a single segment of reporting purposes. Okay. We believe our asset light, that means that they don't really hold a lot of assets, like they don't hold buildings, lands, they don't hold like no big equipments. They're kind of, light business more, so not a lot of overhead and stuff. Highly franchised business model generates strong operating margins. So that means that their cost compared to the amount of money they're making, is more than their cost. And then it says requires low capital expenditure, meaning that you don't have to spend as much as well and open up the franchise. When we reviewed Jack in the Box and McDonald's, just right off the bat, you have to spend like 1.2 to $2 million to create a McDonald's franchise. That's just right off the bat when you start for equipment and stuff. It doesn't seem like with this company. We're gonna get to the actual number of Wingstop, how much it costs for you to get a franchise if you're interested. We're gonna get into that, but we're reviewing their annual statement right now. So brand is our mission to serve the world flavor. We offer guests fresh cooked to order wings, chicken sandwiches, 12 flavors. We've seen that. So their vision is to become a top 10 global restaurant brand. It says that based on their internal analysis, there's a opportunity for our brand to grow to more than 6,000 restaurants. Dang, okay. They have about 2,500 in total right now. So they plan to expand. They plan to more than double. And actually, well, if you take consideration of, so they want to actually quadruple, because if they want to do 6,000 in the United States, 4,000 internationally, that's 10,000 stores in total. They got about 2,500 right now. So they want to quadruple the amount of stores that they have. So that's pretty big. I mean, in comparison, like McDonald's has about 40,000 stores, a little bit over that. So McDonald's is huge. So they're little small potatoes over here. But it also started in 1997. They started franchising, so it's fairly new. McDonald's has been along like since the 60s. So key strategic priorities: sustaining long-term same-store growth, maintaining best-in-class returns, expanding our global footprint. Okay. The foundation of this approach is our culture, which we define as the Wingstop way. Our investment in people as a competitive advantage necessary to continue to scale our organization. I like that. Invest in our people. Okay. So sustaining long-term same-store sales growth. We believe in sustaining long-term same-store sales growth through a combination of brand awareness, menu innovation, delivery, data-driven marketing. Okay. Our national advertising program is funded through the Wingstop Restaurant Advertising Fund, a consolidated not-for-profit advertising fund. Really? They have a nonprofit? Okay, for which a percentage of gross sales is collected from Wingstop restaurant domestic franchisees and company-owned restaurants to be used for various forms of advertising for the Wingstop brand. Wow, this is interesting. I have not seen a company, because when you are a franchisee, you pay also for advertising fee, but they have a nonprofit they that funds this. Why do they do that? Gotta look this up. Because you could learn different strategies from these companies as well. Something you could apply for yourself. Because they do have smart people working for them, and we want to work as smart as them. So why does Wingstop have a nonprofit um, organization running their ads? It says Wingstop Charities runs ads to increase brand visibility. However, the ads focus on the brand's charitable activities rather than the food products. The organization, its programs. Hold on, no, let me actually. How explain the ad fund to me? Explain the ad fund further to me. So the Wingstop Restaurant Advertising Fund is a common franchise industry tool that pulls money from all franchisees and corporate-owned locations to pay for large-scale marketing efforts. It's structured as a nonprofit fund to ensure that contributions are used exclusively for advertising and brand promotion, not for the franchisor's general corporate profit. Okay. Huh. Because as a franchisee, there's a advertising fee you have to pay as well. Just because, when they advertise, when corporate advertises, it also helps your bottom line. But with this company, the thing that's unique is that they have a nonprofit that handles the advertising fee that they get from franchisees. So I haven't seen that with other companies, so I was just curious. But they just saying they have that so that they don't commingle the funds. So it's straight advertising. So domestic franchisees are required to contribute 5.3 of gross sales to the ad fund. So if you're making $1 million, let's say, of gross sales within your store, you have to contribute about 5,000. Well, 10% is what, 100,000. So you would have to contribute about $53,000 to the ad fund, and that's your portion. And average Wingstop stores make about a little bit over than that. How much does the average Wingstop store make per year? Oh, actually, it's even higher than that. So the average annual sales Wingstop restaurant in the United States was about 2.1 million. So if you generated 2.1 million, you get charged off of the gross. So you're paying over like $100,000 just for the advertising, and you send that to corporate. But you have other things also to pay corporate. That's just the advertising portion. There's usually a royalty fee as well. So keep that in mind. So the National Advertising Program supports digital initiatives and related strategies, which allows to deploy digital platform. As a result of these investments, we continue to sustain digital sales above 60%. So most of their sales happen digitally, either through the app or Uber Eats or different things, which typically for a business, it does make it helpful for them. It reduces costs because you don't have to man the locations. And the typical Wingstop store also is not as big, but we're going to get into that because that also helps them as far as keeping costs low. Maintaining best in class unit economics. They say they believe growing popularity of Wingstop experience translate into attractive economics our franchised and company owned location. Existing franchisees accounted for more than 90% of franchise restaurants opened in each of 2023 and 2024. So what that means is the current franchisees of Wingstop are the ones getting more Wingstop stores, about 90% of it. So if you see new openings, which they're opening over like 100 per year, 90% of that is being bought by current franchisees. And when you see that happening, it means that this thing is profitable because you wouldn't be investing into more Wingstop if you're not making money, right? If it's not working, you wouldn't be investing into more Wingstop. So that is interesting. So that makes it, that's another reason to be optimistic about the business. If you see current operators being like grabbing at new franchises, that's also good as an investor. It's like, okay, all right, this thing is working. Upon the opening of a new restaurant, its sales volume generally builds year after year. Our domestic average unit volume has grown consistently, approximately 2.1 million. So that's the amount of sales that's generated per each store, as we've seen. And it says the domestic operating model provides for a low average initial investment of approximately 535,000. So you would have to be, you would spend about $535,000 initially if you do have a Wingstop franchise. And you might think of be like, man, that is a lot of money. But you gotta compare that to the other franchises that we covered. And like I said, Jack in the Box was about 2 to 4 million. Um, McDonald's was 1 to 2 million, and it exceeds more than that. So 535 is actually pretty good, and you're making 2 million. This is initial cost though, but there's also other costs. This excludes real estate purchase or lease costs. This doesn't even cover your rent, and then other labor, etc. In year two of operation of a new restaurant, we target a franchisee unlevered cash on cash return of approximately 70%. We believe low entry costs and high returns provide a compelling investment opportunity for our franchisees that has helped drive the continue to grow our system. Okay, global brand, flavor, experience. So they talk about expanding internationally. We expect franchisee demand for our brand, supported by compelling unit economics. Okay, it says we believe we could achieve our domestic restaurant potential by doubling our current footprint through expansion. We have a robust development pipeline with approximately 90% of our domestic commitments from existing franchisees. All right, we already said that. So they opened 71 new international restaurants. They have locations in 45 states and then 12 countries. That each from the buyer accounts for the defined. Okay. So initially, they entered into an area development agreement. So franchisees pay a $10,000 development fee per restaurant to be developed at the time of a development agreement is signed. Then when a mutually agreeable site for a restaurant has been chosen. So this is the kind of agreement that happens if you want to own a franchise. Then you sign a 10-year initial term with an opportunity to enter into one more renewal franchise agreements. And then you pay a $20,000 fee for each restaurant opened. And if you do own a Wingstop, then you pay 6% of your gross sales. So if you're making $1 million per year, but we saw that you make $2 million, 6% of that is going to royalty pay to corporate, which is about $120,000. Each restaurant also contributes 5.3% of gross sale net of discounts to the ad fund. So you also got to contribute to the ad fund. Okay. So all their food items and packaging good for Wingstop restaurant in the US are currently supplied through one distributor. Wow. Currently, there are 21 geographically diverse distribution centers which carry all products required for a Wingstop restaurant. How you guys doing, man? How's your Tuesday going? I know it's late over here. So human capital, as of December 28, 2024, they employed 1,335 employees. Not a lot. For the amount of stores that they have, that's actually not a lot. So this This number of employees that you see is not the number of employees are working at all the Wingstop. This is just the corporate. There is actually a lot more workers when you consider the franchisees. Um, so of whom 325 are full-time corporate based. So 1,300 employees, diversity and equity. It says 65% of our franchisees and 50% of our board of directors identify as diverse. Let's see, government regulation. Trademarks. Do they have any trademarks? We have many registered trademarks and believe that the Wingstop mark and Wingstop names and logos have significant value. Okay. Community involvement. They do some charity work with St. Jude. That's cool. All right, available. They talk about having their information available. All right, risk. If we fail to successfully implement our growth strategy, which includes opening new restaurants, our ability to increase our revenue and operating profits can materially and adversely affected. They are opening a whole bunch of new stores, and that's one of their strategies. They're expanding fast, domestically and internationally, but they're saying if they're not able to execute, that's a big risk for them. It says our success depends in significant part on the future performance of existing and new franchise restaurants, and we're subject to a variety of additional risks associated with our franchise. It says 98% of the restaurants were operated by franchisees. So then a lot of their money comes from franchisees. So it is paramount that franchisees are successful because it also affects the corporate's bottom line. If we fail to identify, recruit, and contract with a sufficient number of qualified franchisees, our ability to open new franchise restaurants. Okay, yep. Our stated sales to investment ratio. Okay, we don't need to know that. Food safety, of course. I mean, that's with any food restaurant business, that is a risk. Our expansion into new and existing markets may present increased risks. Of course, you're expanding fast. Our success depends on our ability to compete with many other restaurants. Do they cite any specific company? I mean, it is a competitive landscape. Um, they don't actually specifically state a specific company, but there is a competitive market. They also mentioned changes in food and supply cost. I mean, food prices have risen, so that's another cost that they state. Interruption in supply of product. Uh, okay, cyber incidents. That's like in every company now. Cyber incidents is like a risk. So if you guys are interested in going into a major, go into cybersecurity, seriously. It's a risk in almost any annual statement that we reviewed. Cyber. It doesn't matter what kind of business it is. It says our increasing reliance on credit or debit cards for payment increases the risk of regulatory compliance and security breaches or intrusion, which could materially adversely impact our business financial condition. What? It says the majority of our restaurant sales are paid by credit card or debit cards. In connection with credit or debit card transactions, we and our franchisees collect and transmit confidential information to card processors. Um, okay. So they said we and our franchisees must abide by the PCI DSS in order to accept electronic payment transactions. If they fail to abide by this, they could be subject to fines, penalties, or litigation, which could materially adversely impact our business. I mean, a lot of business accept debit and credit card. This is the first business I've seen where they say if they don't comply, that really could affect their business. Like as if it's a big. I mean, it is a big deal, but it's just I have not seen it with a annual statement. It says changing regulations related to privacy, information security. All right, European Union is being strict, so yeah, that's something they have to deal with as well. It says we and our franchisees rely on information technology to process transactions and manage our business, and a disruption or a failure of such systems or issues with our key technology providers or technology could harm our ability to effectively manage our business. Yeah, okay. I mean, that makes sense. Let's see other risks that they state. There are risks associated with our increasing dependence on digital commerce platforms to maintain and grow sales. And then they're saying disruptions, unavailability of our digital commerce platforms could harm our ability to compete and conduct our business. It says customers are increasingly using e-commerce websites and apps. In the fourth quarter of 2024, digital sales accounted for 70.3% of our domestic sales. So people are using digital sales. Not a lot of people are walking in to buy a Wingstop. I mean, which makes sense. I mean, who walks in to order food anymore, right? I mean, unless you're going to sit down at the restaurant, who actually walks in, aside from like McDonald's and stuff, like wings, pizza and stuff, it's one of those things you would call to order or you would digitally order. You wouldn't be going to the store to do it. Uh, let's see if there's any other risk that is worth mentioning. Uncertainty in the law with respect to the assignment or allocation of liabilities. Absent special circumstance franchises and non acts. Oh, look at this. So one of the legal foundations fundamental to the franchise business model has been that absent special circumstances, a franchisor is generally not responsible for the acts, omission, or liabilities of its franchisees, whether with respect to the franchisee's employees or otherwise. So what that's saying is, if you are a franchisee, corporate is not responsible. If you were negligent, or if you had some liabilities, or if you had issues with your employees, it's not their responsibility. But it says in the last several years, this principle has been the subject of differing and inconsistent interpretation at the National Labor Relations Board and in the courts. And the question of whether a franchisor can be held liable for the actions or liabilities of a franchisee under vicarious liability theory, sometimes called joint employer, and has become highly fact dependent, generally uncertain. It says in March 2024, a federal court blocked the enforcement of leaving in effect. However, it's possible will attempt to restore. Okay, so they're saying right now they're good, but possibly in the future they could say, oh, you might be liable too. And the reason that's important is if they're going to be liable for the actions of franchisees, that's another risk. And they might have to allocate more capital for that as well. So you don't want to see that from an investment perspective. Other risk, let's see, our business activities subject us and our franchisors to litigation risk. Let's see if they have any litigation right now. We may engage in litigation or arbitration with our franchisees. Our business could be adversely affected by increased labor cost. Yep. I mean, a lot of food companies, businesses are being affected by labor cost. We saw yesterday, Cracker Barrel, same thing happened to them. Labor cost increased. And when we covered other fast food, that also was the case. It is restaurant week, guys, by the way, and we don't have a company for tomorrow. So if there's a specific restaurant you want me to cover tomorrow as well, please drop it in there. If it's publicly traded, we could cover it. Any specific restaurant you would like me to cover it, let me know. Other risk, our success depends in part upon effective advertising and marketing campaigns. Yeah, I wonder what kind of advertising. I don't know if I see a lot of Wingstop commercial. Do you guys see a lot of Wingstop commercial? Cracker Barrel yesterday, they use a lot of billboards. They have about 1,300 billboards that they advertise on, and billboards are super expensive. And like 1/4 of the advertising spend was spent on billboard for Cracker Barrel. We don't know exactly the breakdown of Wingstop, but I'm just trying to think. Maybe it's because we don't have Wingstop over here. I don't see advertisement. Oh, San says I seen like one, so she's not seeing like a lot. Um, yeah, it's interesting. Like nowadays, because people don't even have TV and cable like they used to, it is kind of hard to advertise. Unless you're advertising on YouTube or social media, it's not as easy as it used to be. We are vulnerable to changes in consumer preference and regulation of consumer eating habits. It is crazy though that all these places exist. Like, think about Canes. Like Canes, like just chicken tenders. Wingstop, it does wings. It does chicken tenders, fries. I think that's about it. They don't. It's very like small offerings, but they're doing really well. And you would think with all this competition, KFC, Popeyes, pizza joints that offer wings, Buffalo Wild Wings, you think like, well, why would they open a kind of store like that? But they have opened it and they're doing well. All right, other risk, we are vulnerable to changes in consumer preference. All right, we already read that. It says our operating results may fluctuate significantly and can fall below expectation of security analysts and investors due to certain factors, some of which are beyond our control. It says the timing of new restaurant openings. All right, we don't need to know that. Because of many of our restaurants are concentrated in certain geographic areas, we are susceptible to economic and other trends, including adverse weather conditions. It says as of December 28, 2024, 52% of our 2,200 domestic restaurants were spread across Texas. So Texas has a lot of Wingstop, followed by California, then Florida, Illinois. So it is geographically, they're not like spread out. It's really concentrated. It says, given our geographic concentration, economic conditions, local strikes, terrorist attacks, man-made disasters. Okay. Unexpected events have impacted our. They talk about COVID-19, of course. Our business is subject to various laws. Oh, yep. That's not worth reading. Our current insurance and the insurance of our franchises may not provide adequate levels of coverage against claims. Man, these guys are stating all the risk. Damage to our reputation could negatively impact our business. Yup, of course. Our expansion into international market exposes us to a number of risks that may differ in each country where we have franchise restaurants. I mean, that is a big risk when you are expanding internationally. It's a different different laws, different requirements, loss of key employees. Yep. Our failure and ability to enforce our trademark. Yeah, we don't need to know that. Risks related to our indebtedness. So they have a good amount of debt, I think, because they're expanding fast. It says we may be unable to generate sufficient cash flows to satisfy our significant debt service obligation. So they're saying if they don't make enough money, they're not able to pay some of the debts that they have. So they do have some debt. Our stock price may be volatile or may decline regardless of our operating performance. We have noticed, I mean, just looking at this year, that their stock is volatile. It does move around a lot, which is very interesting. You don't usually, at least I haven't observed a food company stock fluctuate like that, like wild swings. It says anti-takeover provision in our charter documents could make an acquisition of us more difficult. Limit attempts by our stockholders to replace or remove current management. This is interesting, but we don't need to cover it on this live. Where they talk about if someone's trying to acquire them, they have some measures taken to ensure that it's not easily done. It says our amended and restated certificate of incorporation. All right, we don't need to know that. Cybersecurity again. Cybersecurity. I'm telling you guys, if you're in college or if you want to go back to school, study cybersecurity. It is insane. Cybersecurity concerns is in every freaking financial statement that we review. Okay, so earlier this year, they did declare a quarterly dividend of 27 cents per share. I mean, that is garbage. It's not a lot. That is nothing, I tell you. I mean, better than nothing, right? But it is kind of nothing too. All right, performance graph. So they're saying if I don't know why they don't like to use colors. What is wrong with these companies? Like this is somebody could do a better job in a freaking class presentation. Like why don't you add some colors? But anyways, so the circle shows what Wingstop stock is, and it's talking about if you invested $100 in as of December 28, 2019, how much your money would be, and if you invested $100 right now, your money would be instead of looking at the graph, you don't have a table. Oh, your money would be $600. So you would have made $500 in profit. So now let's say you had used the $100 and invested in S&P 400 restaurant, like comparable restaurants similar to Wingstop. How much would you have made? And that $100 would have been about 220 or so. And then if you invested in Nasdaq composite, like a safer investment, you'd have rendered that much. So just over the 5 years, it seems like Wingstop has been a great bet. Like to change 100 into 600, that's pretty good. You know what I mean? So that's pretty good, and that's just with 100. So if you invested 1,000, would have been $6,000. So it looks like from a stock perspective, they have been doing incredibly well. So let's see if maybe we could get into action, right? I mean, we're gonna look at some of their, financial statement. We're gonna see if it is worth investing. So overview, it says they have 2,500 restaurants in our system. 98% of it is franchised, and 50 are company-owned restaurants. And most of the time, they keep company-owned restaurants just so that they could try, like if they have new menu, they want to like do a new thing on the app, and they want to like pilot different programs. They keep company-owned restaurants for that, but yeah, 98% of it is owned by franchisees. It says we plan to grow our business by opening a new franchise restaurant, increasing our same-store sales. Um, it says domestic same-store sales have increased for 21 consecutive years, beginning in 2004. Wow, that is impressive. For 21 years, the Wingstop you see in your local city every year, the amount of money they've been generating has been growing. That is super impressive. Wow. Okay. Dang. So I've been sleeping on freaking Wingstop. How did I not know this? 21 years. Wow. Which includes 3-year cumulative domestic same store sales grew 41.6%. We believe our asset light, highly franchised business model generates strong operating margins, low capital expenditure. So it says highlights system-wide sales increased 36.8 over the prior year to 4.8 billion. Um, Restaurants increased by 15%. Same store increased by 19%. Man, that is hard to do, like, because you got to think about it, right? I mean, for people to keep spending more every year, that's because, economic conditions change. And I mean, in the 21 years they're talking about, you also have the Great Recession during '08, you know, '08, '09. Even during that time, their sales was increasing. So very impressive. Digital sales increased 70.3%. Total revenue increased 36%. Net income, so it's looking positive in almost all areas. So restaurant count, domestic company owned. Opening closures. All right, we don't need to look at this. We already have seen that. System-wide sales. So they generated about $4.7 billion in sales. With each store about generating about 2 million. So when we're looking at the sales, this is the amount of money the corporate made, not the actual franchisees. That doesn't come into play. Like, so you got to separate those two. This is how much corporate made from the royalty and the other things that it gets paid for when you first initially start the franchise. Just from all that, that's how much they got paid. But they do have their own stores as well, but like 50 of them, so they make money from that as well. Net income 108. Okay. Let's see the numbers. The following table reconciles. So net income was about 108 million. Really? Let's look at their income statement. So revenue, the following table sets forth certain income and expense items, including the consolidated statement of income, advertising fees, company-owned restaurant sales, 119 mil. Oh, okay. So then that 4 billion number actually is the money generated from all the stores. So royalty revenue, franchise fees, and other. So they generate about 288 million from their company-owned restaurant sales, 119. Cost of sales, which means how much it cost them to get that money, about 91 mil. So operating income was about 165 million, and then net income was 108. So, I mean, that's pretty good. So they have like about a 15% net income. So they made $625 million from the fees and stuff that they collected. That initial number I told you guys about 4.2 billion is how much sales was generated through Wingstop, but Wingstop got about $625 million just being a franchisor, not doing much work. And then after that, after advertising, after all the other expenses, they took on about 108 million. That's a big profit margin. When we looked at Cracker Barrel yesterday, their net income was like 1.5%. And then compare that to this company, about 15%. So that's pretty good. That is very good. You don't see that. I mean, especially within the restaurant industry. So they are profitable, very profitable as far as percentage. So they're very efficient. Let's see. So food, beverage, and packaging cost, labor cost was about 28 mil. Other restaurant operating expense. Okay. How much do they pay in taxes? Income tax expense. Wow, they actually paid a decent amount of income taxes. So the effective tax rate was 26%. Wow. This is one of the highest taxes we've seen as well. Most of these companies find a way. I mean, we saw Cracker Barrel has a tax benefit. They had it previous year and this year. So they getting money back. This company is paying some money. So they had $359 million of cash and cash equivalents on their balance sheet. And this is their cash flow statement, but they're kind of summarizing it over there. Let's see what else. So they talk about commodity price risk. They say many of the food projects purchased by us are affected by weather, production. It says, although we enter into arrangements in an effort to mitigate the price volatility, there's no established fixed price markets for fresh bone-in chicken wings, so we may be subject to prevailing market conditions. It says bone-in chicken wings accounted for approximately 19.8 and 16.8 of our company-owned restaurant cost of sales. So most of their the food that they buy, it's the chicken wings, the bone-in chicken wings, which makes sense. Almost 20% of it. It says a hypothetical 10% increase in the bone-in chicken wing cost would have increased company-owned restaurant cost of sales by approximately 1.8 million during the year. Man, you see, like, so so let's say the wings at the store just went up by $1. So it used to be $10, but now went up by $1 to $11. You know, for us, it's like, oh, it is expensive, blah blah blah. But for them, because of the amount of volume of chicken wings that they buy, that cost, that 10% increase would have costed them in total about 1.8 million, just because of the amount of chicken that they buy. So even little small fluctuation in food cost, like 10%, it's not like, it is large, but it's not like incredibly high. Even that number affects them heavily. So it is important, and that's the reason they mention it. That is the risk also that they have to monitor. So they have long-term debt about 1.2 billion. They say they have a fixed rate debt structure, has reduced exposure to interest rate increase. Okay. Let's see. Let's see. So this is their audit report. KPMG is their auditor. It's a big four accounting firm. Executive confirmation. I'm telling you, this is one of the shortest financial statements we've ever seen. Incredible. Even their financial statement is on point. Salute, salute. Yeah, this is where the CEO and the CFO have to sign the annual statement saying that it's true. And this happened after like all these Ponzi schemes and started happening, and now they require the CFO and the CEO to sign the annual statement saying that is true, and they could be held liable. So then they make sure to check as well. But most of the time they don't really check anyways. But that's why you see the signatures as well there, just other information. It's probably not useful to you, but in case you're curious, um, so they do have a critical audit matter. Evaluation sufficiency audit obtained over royalty revenue. The company recognized $259 million of royalty revenue. Royalty revenue advertising fees are calculated as a percentage of franchise restaurant sales over the term of the franchise agreement. We identified the evaluation of the sufficiency of audit evidence obtained over royalty revenue as a critical audit matter. This evaluation required subjective audits due to the highly automated nature of certain processes to record revenue that involves interfacing data across multiple IT systems. The complexity of the IT environment required the involvement of IT professionals with specialized skills and knowledge. Okay. So the auditors were not able to confirm like the actual amount. Well, it was difficult for them to confirm some of the numbers they reported because they were using like some complicated IT systems, different systems. So they mentioned that. So that's worth looking into. Okay. And they've been the auditor since 2019. Okay, so balance sheet. This is where we're gonna see how much cash they have. They have $315 million, and it jumped up from the previous year. They only had about $90 million in cash, so it jumped up 315 million. Very good restrict cash. Um, so on all in total current assets, money easily available to them, 395 million. And we want to notice because usually you want to compare the current assets, which is readily available money to you, to your current liabilities, which is payments you got to make within less than a year. You want to see your current assets being bigger than your current liabilities. You also want to look at other assets that they have to see if, like, hey, do they own other stuff that is interesting and that makes them more valuable? And that's the reason we look at the balance sheet. And so you look at their property and equipment in this company. They have about 125 million, nothing crazy. Operating lease assets, you don't really need to look at that. Goodwill, they do have some goodwill, so they must have acquired a company. Where's the goodwill being coming from for Wingstop? Where is the goodwill for Wingstop coming from? Did they acquire a company? Oh, acquisitions when a company, yeah, and I know that, but specific sources of Wingstop's goodwill. The private equity firm acquired Wingstop. Um, so the purchase price exceeded the book value of Wingstop assets. Okay. So it was when they were bought by the private equity firm. When the private equity firm bought them, they had to recognize a goodwill. And that's when you pay over, like, this is the other reason to know about the balance sheet, right? If someone was to buy the business, let's say right now, right, total assets is shown 760 million, but somebody says, hey, no, I want to give you $1 billion. And then since they paying you over the assets that you have, that 300,000 extra that they're giving you, that would be considered goodwill. That's like extra money that they're giving you, and you consider that as a goodwill. So then when the new company start, you record that in your business, and it's kind of like an asset, but it's not really. It's really like how much you overpaid, kind of. That's kind of what it is. But sometimes it holds values like, oh, the brand, the way they operate their business, blah blah blah. But it's not actual asset. Current liabilities. These are payments they got to do within a year. They have about 87 million. So when we compare the current asset, 395 to 87, so they are well and good to pay any common liabilities in the short term. They do have some long-term debt, and it looks like it grew. They had 700 million in debt the previous year. Now it's 1.2. So they added about 500 million in debt. That means, and I suspect this is because they're expanding fast. They're expanding fast into new market, and that's probably one of the reasons this is happening. But all in total, $1.3 billion in liabilities, which is higher than an asset, which should concern you a little bit. But this is one of the situations perhaps you have to make an exception because they are profitable. As far as the percentage that they're profitable to is pretty good. So they might be taking on debt right now, be like, hey, let's expand quick because we're making a lot, and so that's kind of what they're betting on. So you have to take this with a grain of salt. They do have more debt than their assets, but it's it's not that bad. Let's just put it that way. So we looked at already their revenue for a previous year, and it grew like from the year to year, from 2022 to 2023 to 2024. Their revenue has grown like consistently. Went from 357 million, 460, 625. And then you look at their cost of sales. How much did it cost them in general? So that's about 460 million. Operating income has increased every year. That's also another good sign. Interest expense going up every year. That's not a good sign. Well, it hasn't gone up every year. It dropped previous year and then now went up a little bit. Actually, in 2022 is their highest. And then income tax expense. I mean, these people actually, man, that's one thing I would say that they get a hit on taxes. I mean, they paid $38 million in taxes last year in 2024. The previous year they paid 24 million, 16 million. This is the first company I've seen like paying big tax payments. Huh. Wonder what that is. They gotta do some they need a tax guy, man. Yeah, this is really high for corporate. Corporate find a way usually to not pay much. So this company paying their a good amount of taxes. So net income also increased 52 million 2 years ago, 70 million last year, and then 108 million 2024. So they are getting better and better. And we have seen that with most of the numbers we looked at. So if we look at the cash flow statement, this is what it shows us how much actually cash that they spent. Because other times you could use credit, you could use different arrangements, actual cash spent. So cash provided by operating activity shows you how much did they actually make in cash from their core business, which is like selling, money that they get from the franchisees and the royalty fee and etc. They made 157 million. Investing activity shows you like what kind of investment they do. So it looks like right here they purchased property and equipment about 51 million, and they've been spending the last 3 years. So when you see a lot of investment happening in investing activities, you got to be like, okay, long-term growth is happening. They believe they're gonna have some long-term growth, and that's why they're spending a lot. They're spending a lot of money, $51 million. It says acquisition of restaurants from franchisee. They even buying out their franchisees, if necessary, at 14 mil. So investing activities alone, they spent $62 million last year, and they've been spending the past 3 years, 52 million in 2023, 28 million the prior year. Financing is when you look at how much the debt did they take, did they buy their own stock, did they repay debt? So in here, it looks like they bought their own stock back. And companies do this strategy if they think, hold on. Well, they could do it for two reasons, right? One of the reasons is they say, hold on, our stock in the future could trade at even at higher price. So they say, we're going to buy it now and then bring it in, and they could issue it later, and they spent $314 million. And then the other reason could be is like maybe if they don't see any other investment opportunities, they say their stock is their best investment. They spend on that as well. We don't know the actual reason why they did that, but they have spent $314 million last year buying their own stock. They did borrow 500 million. Um, they paid dividends about 28 million. Okay, so that's about it with the finance. Let's see. Let's go back to the stock and let's see what the analysts are saying. And then just actually right before that. So how much would it cost you to? How much would it cost me to open a Wingstop franchise? Let's see how much it would cost us. It says the estimated initial investment to open a Wingstop franchise ranges from 298,000 to $1 million. That's just for one. And then in addition to the total investment, you also have to meet these criterias. You have to have a minimum net worth of 1.2 million. Liquid capital. What that means is easily accessible cash, like in your bank, 600,000, or like something easily convertible money of 600,000. So this kind of investment is not for your average Joe. And then you have your initial franchise fee of 20,000 per store. You have a development fee of 10,000 per store, and then you also have that initial build up cost of 298 to 1 million. Yeah, it is expensive, Sam. It is expensive. Then you also have your royalty fee, your marketing fund. So yeah, it's an expensive endeavor, but if you have the money, so let's see what individuals and companies own the most Wingstop franchise? I wonder if Ross has like over 30, I think. No, no. Fran actual actual uh so there's a it says one of the country's largest multi-brand restaurants of the group operated. So there's one particular franchisee. They own 185 Wingstop locations. Sizzling Platter was acquired by Bain Capital. Okay. Another place called Far West Services, a major Wingstop franchisee found in 2003 with more than 100 locations across the Western US. Yeah, usually it's the people that currently have a franchise that end up owning more. GSR Group, an operator with a large number of Wingstop franchisees. Rick Ross, the most famous Wingstop franchise, the rapper, owns nearly 30 Wingstop franchises, some of which Boss Wings Enterprise. So Rick Ross was on this early. Um, Charles Lofen, I don't know who that is, a Wingstop pioneer who became the first to take the brand outside of Dallas. He and his team now own over 115 Wingstop restaurants. It says Brandon Gawthorpe, a franchisee who operates more than 30 locations. Asif, 75. Steve and Lalonda Tucker, brand partners to the couple has been featured in Wingstop franchise success stories. Master franchisees. Um, Let me see. What year did Rick Ross get his franchise? Man, so Rick Ross opened his first Wingstop franchise in 2011. Man, he was early. He was reportedly inspired to pursue the investment after developing a strong affinity for the brand's lemon pepper wings. I mean, he even has a song called "Lemon Pepper Wings," right, with Drake, which is which he also mentioned in his music. It says by 2014 he had expanded his Wingstop portfolio to 5 locations, and now he has over 30. Man, I wonder if he has the stock as well. Nonetheless, each store generates about 2 million, and the average profit margin they say for each store is about 10 to 15%. So like about 300,000 per store is in net income. Multiply that by 30 stores that he has. So 300,000 by 30 stores, that's about $9 million. That's going into his pocket. So Rick Ross is doing well with his investment per year, by the way. And this is assuming like that 15%, which is the average return that these these franchisees make. So pretty good investment on his end. I mean, I'm sure he made a lot of initial investment, but yeah. I mean, some of these franchisees and kind of step out of you know uh, Wingstop. Like for McDonald's, there's a company that owns so many McDonald's franchise. It owns so many that it itself is also a publicly traded company. They own like thousands. So it is hard to get at the initially to get in the door. We've seen this with Domino's. We've seen this with Jack in the Box. All this, but once you get in the door and you know how the operation works, people will just keep getting more. Um, and with Wingstop, it's also not a like what is the typical size for a Wingstop store and compare that to its competitors, it's not that big. So a typical Wingstop restaurant is significantly smaller than a full service dine-in wing restaurant like Buffalo Wild Wings. Like Buffalo Wild Wings is huge, but comparable to or slightly smaller than other fast casual. And it says the typical size for a traditional Wingstop restaurant ranges from 1,200 to 2,000 square feet. This smaller footprint is a core part of their business strategy, enabling lower rent and build out costs. Because Wingstop has focused heavily on carry-out delivery, a larger dining room is not essential. This is the other reason why they're so successful is because it doesn't need a lot of real estate for this kind of business to happen. It says digital only prototypes. Some new locations have been designed as cashless, digital focused stores with no dining room, shrinking the footprint around to 1,300 square feet. And then ghost kitchens. For some delivery only urban markets, Wingstop has opened ghost kitchens that are less than 400 square feet. Wow. Go. You guys know about ghost kitchens? This is like a commercial kitchen that you could rent out. Many businesses could operate from it, but you don't actually have a restaurant. And but you deliver and stuff from Uber Eats, and so those are what called ghost kitchen. How many? Let's see. How many ghost kitchens does Wingstop have? So they don't disclose the number, but it says that ghost kitchens have been key in entering into new international markets rapidly, such as the initial launch of four ghost kitchens in Madrid, Spain in 2022. And the other thing that they're doing is also they're using robots um, in their stores. Let's see if we can find a video. Um, Robots and Wingstop. Bellabot robot. Oh man, I thought there was gonna be a video. But they are using robots. Wingstop and the use of robots. So Wingstop use of robots and automation primarily focus on AI powered systems for ordering and kitchen management, rather than physically fry cook. Rather than physically fry cook robots like those tested by competitors, the company has invested heavily in digital solutions. Um, so voice bots since early at least 2023, Wingstop has used virtual assistants from the food tech startup Converse now to handle phone orders. This frees up employees to focus on in-store customers and food preparation. The bots can speak English and Spanish and are designed to mimic human conversation. AJ says wings don't need AI. They need to be tossed with love, human touch. No, no. AJ wants that human touch. He don't want no robot touched wings. Do you guys? I know he's joking right now, but did you guys care if your food is made by a human as opposed to a robot? As long as it tastes good, does that make a difference? Uh, Wing Wingbot SMS as far back as 2017, they launched Wingbot, an SMS-based ordering tool that allowed customers to place an order by testing the word order to a specific number. Okay. And then upselling that says the AI-driven ordering system are also programmed to automatically upsell customers on high margin items, boosting the average ticket size. Dang. So these AIs are tricking you to buy more, man. AJ says, I want person. Fast food can be robot. So you don't mind if the fast food is robot, but you want a person in this kind of for wings and stuff like that. Okay. You guys share the same sentiment as AJ, guys? So smart kitchen technology, they says AI forecasting engine. The system uses machine learning to predict demand in 15-minute increments by analyzing over 300 variables, including weather, local events, and school schedules. This allows kitchens to prepare for peak hours and sudden spikes in orders. So they have an AI system that allows them to predict, demand in 15-minute increment based on weather, school schedule, etc. That's incredible. AJ says McDonald's practically a robot with how tight the place is run. Man, you ain't lying, man. McDonald's don't play. And you know I used to work there, man. It is. You're like a freaking robot. Non-stop. That's why those people should get paid more, honestly. It is a hard job. Fast food is hard job, man. I don't care what anybody says. That is hard work. Faster service times by streamlining the entire process from forecasting to cooking. The smart kitchen has significantly reduced wait times. It says Wingstop reported that the system cut typically order times from 18 to 20 minutes down to just 10 minutes. Wow, okay. So they're investing into some innovations that is helping them be more efficient. It says digital order interfaces. After a successful pilot program, Wingstop began rolling out the smart kitchen system across its U.S. restaurant in 2025. It says noteworthy comparison. It's not using the physical fry cook robots that have been tested by other chains. Oh, okay. All right. Let's go back to their stock. Let's see. Let's go to Yahoo Finance, my favorite. Yahoo Finance. Wingstop. And then we're going to wrap it up. Guys, if you got suggestions for tomorrow, let me know. We're almost going to wrap up in here within the next 5 to 10 minutes or so. It is restaurant week. So if there's a restaurant that you want me to cover tomorrow, let me know. My boy AB is out. He's handling some family stuff. So this whole week, you're going to be rocking with me. If there is a specific company that you are interested in, let me know. We'll cover it. If it's publicly traded, the information is readily available. We could cover it. Private companies, we can't because they don't publish their information. So let's see. Analysis. Let's see what the analysts are predicting the stock to be. So there's a lot of people covering it. There's 26 analysts covering the stock, and 16 of them are saying it's a buy. 6 are saying hold. So that's 22, and then 4 are saying strong buy. And you can see it right here on the green, the light green, the dark green. So these are what the analysts are saying, and they're predicting the price to be at $399, almost $400. It's currently trading at 325. So if it does reach that number, which is let's say for 400 for easy math, right? That would be like over a 20% increase, which is pretty good if their number is right. And then some are predicting the stock to even go up to 477. And then the last few quarters, you see the numbers that you see up there. It says beat 008. If you see the numbers right here, these are quarterly companies report their numbers, and there is estimates that they make The analysts make estimates, the company makes estimates, but if they beat their estimate, it's kind of it's positive, and so they have been beating the estimates for themselves. So that's pretty good. That shows a good sign. Um, Let me see. Also wanted to look at who are the holders, who hold Wingstop stock, major holders, BlackRock, Vanguard Group. I mean, major companies own this. Not a lot of insiders. So let's see how many people have. Let's see how many people have shorted Wingstop shares. And when I'm talking about shorted, it's essentially mean, just for easy explanation, there are people that predict the stock could go down and they would short the stock. So if you see a lot of shorting of a stock, it is also an indication that a lot of people were predicting the stock to fall down, and that is also something to look at. Um, so now we compare this. So there's about 1.87 million of shares that were sold short. How does this compare to other competitors? And nowadays, man, with AI, it makes analysis so much easier, man. Honestly, how do we even live our life without AI for so long? Incredible. So, when comparing Wingstop short interest to its competitors, it's important to differentiate between direct competitors like Buffalo Wild Wings. So, Shake Shack, higher short interest. Shake Shack has a short interest of 15.28% of its float. This may suggest higher skepticism from investors due to factors like competition. And then you look at a company like Chipotle, has significantly lower short interest of 1.85. So that means a lot of people are not predicting the stock to go down as much. With Wingstop, about 6.73, and then you look at Starbucks, only 3.97. You look at McDonald's, only 1.11. So you want to see a low short interest as well, because that means there's not people, spending millions and billions of dollars. Because usually, people that short another stock are what they call like, sophisticated investors, or people that just like take risk, but that's what they call them. But some of these guys do have tools that the ordinary person does not have. So most of the time, I'm not saying they're accurate, but I'm just saying that should worry you if you see a stock and you like it and you say, "Oh, I like this place. I eat there, blah blah blah. I like their CEO." But if you find out on the other end, a lot of short interest is on it, and this is the same thing that happened with GameStop. I don't know if you guys remember with the meme. This is what they did. Like they found out, most of these guys had shorted the stock, and they said the group though rallied together and then ended up pumping the stock, and they kind of played against the people that had shorted the stock. But that usually doesn't happen. People don't really gather together like that to make that happen. So that's why it's one-off situation. So Wingstop doesn't really have a lot of shorting. It's not as high. It's not as low as like McDonald's or Chipotle, but it's not as high as Shake Shack. So that would give us some confidence about the stock and its future growth. Where am I at? Yeah, I mean, for me, I do like their growth potential. They are growing fast. The average sales per franchisee is pretty impressive at 2 million, and they're profitable. They're very efficiently run. They are expanding fast internationally as well as domestically. They have been growing over the past 20 years consistently. Um, Balance sheet and their finance looks good. And then consumer sentiment. Like if we look at people love wings. If we look up what is the consumer sentiment about Wingstop, because this is another metric that we got to look at, to see if it's. We looked at Cracker Barrel, foot traffic and stuff has decreased, but with this company, um, so look, consumer sentiment about Wingstop is mixed with a strong brand loyalty and positive buzz around its flavors, offset by concerns over price increase and consistent food quality. Oh, and a recent slowdown in sales for some customer segments. Strong brand loyalty, it says, has a dedicated fan base that appreciates its wide variety of unique wing flavors. It says menu innovation. The brand successfully introduced crispy chicken tenders, which generated a lot of buzz. So they just introduced those, huh? Interesting. Many customers trust Wingstop as a flavor expert. Um, Popular ranch dressing. The popular signature ranch dressing is a particular point of pride for many fans who consider it a key part of the Wingstop experience. As there are some negative pull, it says consumer pullback, rising price is something they complain about, inconsistent quality, I guess on Reddit and other places, delivery issues. But quality is more of the franchisee's responsibility. Of course, the franchisor, the corporate has the responsibility, but that is something also they know. Delivery issues, disappointing fries. It says the fries have garnered mixed reviews. Oh, so who has tried the fries for Wingstop? What do you guys think? Are they right? Are the fries disappointing? Are they not like McDonald's fries? But it says overall consumer sentiment is generally positive towards Wingstop core product. So yeah, I mean, for me, overall, companies doing really well. The annual statement shows that they are run well financially. The balance sheet looks healthy, and store sales are growing. Um, so there's a lot of positive. The things that do concern me is the price. Really, that's the number one thing. It is a little pricey. It's trading at 52 times its earning, 54 times its earning. So it's a little overpriced. So it is a stock that I would be interested in investing, but I would have to wait for the price to go down a little bit. And then the other thing also that should concern you, there's this thing called the beta. And beta, you want that number to be one or less than one. If you see a number above one, it shows a lot of fluctuation. And which is true because when we looked at the last 12 months, this stock has fluctuated so much. So if you are a person that gets anxious when the stock dips and ups, you'd like to look at your stock. That's another reason, um, also to note. Dividend is not a lot, so that also does not attract me as much. Um, so I'm kind of like, mm, I would wait. Personally, I would wait. If I see a little dip, I'll jump in. But right now, I'll pass. So that's my take for Wingstop. But I'm very impressed. Is these like low key companies? Like the same thing happened last week with Roku. Roku was like, I thought it was a dead business. Then you review them, you're like, oh shoot, Roku is amazing, like profit margin amazing, and that's the same thing with Wingstop. I mean, Wingstop impressed me. I mean, it's growing, making money, run well. So kudos to Wingstop, man. So that concludes today's episode, guys. The profit report with AB and Steve, man. I still haven't picked a company for tomorrow. It is restaurant week. So if there's a specific restaurant you want me to cover, man, let me know. If it is publicly traded, information is readily available. We could cover it, analyze it. Any questions you have, We'll research it, use my knowledge in addition to AI and other resources that we have to look it up. We're not experts, we're all learning together. And ultimately, the goal is for you to be more educated. And then if you want to invest, you can use this information to guide your investment decision. Or if you just want to learn more, it doesn't hurt to learn more, right? So that's what we're here for. Shout out to you guys. And I just want to give a shout out to all the people in the chat, man, all the day ones, man. Shout out to AJ, shout out to San, shout out to Rebecca, shout out to Bree. Um, he said this guy's trying to replace PBS. Hey, man, why not? Get it how you can. uh, get it how you can. I might get canceled though if I'm trying to be PBS. You know, they might cancel me. We got to create our own thing. But yeah, if you guys got a suggestion for tomorrow, let me know before I sign off. And again, please subscribe, like, share. I almost did not do this live tonight because I played soccer. I usually don't do Tuesdays, but I'm like, we got to keep the streak going. I think we're like 43 days or something straight. We haven't taken a break. We going in every day, bringing it in. You know what I'm saying? That's what we're here for. This says PBS is going away. We need this guy. Hey, if they pay us, we here. We here. AJ, you got to jump in one of these lives with me this week, man. AB's not here. You got to come out here. B says yes. Yeah, man. So that's what we're here for. But again, much love to you guys. Appreciate you for coming in. And if you're rewatching this, thank you also for watching. Much love. Happy Tuesday. I'm gonna be signing out again. This is the Profit Report with AB and Steve. I'll see you guys tomorrow. Have a good night.